YouTubers! Mike Martins here with the Mike Martins channel. Guys, this has been sent to me like 13 times in the last hour and a half, 2 hours. Bank of Canada holds rate, forecast decline at GDP of 7.8% this year. Decline in GDP, gross domestic product, 7.8% this year. Una bajada en lo GDP del país de 7.8% este año. Guys, this is actually a really big deal. But like I said, if you could follow the trends and know the patterns, you could do well. You could actually really do well. With them holding rates low, it's cheaper to borrow money. And then what happens? Boom, I get a call at 6:30 in the morning. Mike, Air Canada's going through the roof. Yeah, I know. I bought it at 14 and I bought it at 15. And look where it's at today. Sold some of the profits today. Same thing with a lot of other stocks that other airlines that I have that are going through the roof, like 8 other airlines I invested in. Took some profits today, and someone asked me, Mike, what's your plan? The GDP is going down, this and that. I don't care what Canada's doing, to be honest with you. It's if the Democrats win or cheat the election, this coming election in December, then you get out of airlines and you put your money in oil because we're going to war. And that's just me. I've been following the patterns. I've been seeing how things are going, and I knew they were going to have a rate. Obviously, they're going to hold rates at a historic low. Now, let's read a bit of this, and I'm going to talk about what we talked about on the channel. Ottawa, the Bank of Canada will keep its interest rate at 0.25% until the national economic picture improves, which Governor Tariff McClellan said Wednesday will take a long time. Low interest rates are meant to help. So here it is. It's to stimulate the economy when you lower rates. Now, their toolbox is running out of tools here. We talked about the economic toolbox, right? Like 2 years ago, and then a year ago we brought up the economic toolbox and what tools banks have to use in their favor when it comes to hard times. They're out of toolboxes. Their toolbox is out of tools. Now, this is what I've been saying, and I said this on Mike in the Night 5 times. They're gonna go digital. Oh, we can't have cash. Cash is too much of a burden, and with COVID and all this Mickey Mousing, they're gonna get us off cash. They're gonna go digital, and they're gonna go to negative interest rates. Look at me. Negative interest rates. They're going to go negative. And that's what's going to happen. And then I'll tell you what stock to buy once that happens. But right now, I'm just watching things right now, taking a bit of profits here and there, taking a bit of skimming off the top, like they say in the mob. Just skim a little off the top. No one really needs to know that you're there. Yeah. So this to recover from the COVID by making borrowing relatively inexpensive. What do you think we've been doing for the last 10 years? First-time home buyers loans, everybody, and throwing the FOMO in them. What is this going to mean for the housing market? A lot. Tune into trends in the housing market tonight. McCallum noted that the unusual clarity of the central bank provided on the path for its key rate, owing to the unusual level of uncertainty facing Canadians worried about their health and jobs. What the bank expects is a quick but partial economic bounce back from lifting the lockdowns, giving a way to slower, bumpier recuperation phase. And its updated economic outlook released Wednesday, the bank expects the economy to contract by 7.8% this year. I say 15% if you ask me, driven downward by year-over-year contraction of 14.6% in the second quarter. Then it expects growth of 5.1% in 2021. 5.1% in 2021 seems kind of reasonable, depending on how fast they reopen the economy and start getting things bounced back, right? Unfortunately, COVID's going to stick around to the elections. They want to force mail-in elections in the United States. They don't want people going to the polls to vote. They want you to mail in your votes, and that's how it's going to work out, right? Both figures are less rosy than those that our great leader Trudeau Liberals relied on their economic update released 1 week ago. The Bank of Canada reported pegged the annual inflation rate of 0.6% this year, rising 1.2% in 2021 and 1.7% in 2022. Until inflation reaches the bank's target of 2%, the interest rates won't move, McCannon said. Canadian businesses are facing an unusual amount of uncertainty, so we have been unusually clear about the future path of interest rates, McCallum said. If you've got a mortgage, or if you're considering to make a major purchase, or your business and you're considering making an investment, you can be confident that the interest rates will be low for a long time. So again, they want to massage consumer spending. They want to get consumers back out there spending by lowering rates. And again, the last tool in their toolbox, what do they have? A torque angle meter in there? What else do they have in there that they could use? A protraction guide, or what, a stud finder? But the governor was quick to caution the forecast could be easily be thrown off by a severe second wave. Okay, so they say we're in a second wave. We are not in a second wave. We don't know if it's a second wave. How long do we got to keep the second wave going? How much time to the American elections happen? They're only doing this because of the elections in the States. I mean, if this fell on Obama's lap, you'd have 0 cases and another Nobel Peace Prize would be given out. That's the difference right there. Okay, he looked to the fall, another potential issue, saying that the bank's essential planning scenarios could be hampered if schools and daycares only partially reopen, leaving parents, particularly mothers, to choose between work and childcare. Families are facing challenges, McCallum said during the long-term press conference. Hopefully, as the virus progresses, again, it's progressing now, we get better. And I'm not even going to read this crap. So this is it, guys. There it is right there. There it is. So follow the trends, guys. You want to make money? Follow the trends. Like Gerald Celente says, trends in the market. Follow the trends in your trends journal, and you will see what's happening. Right? That's what I've been doing. And you know what? Money's always going to be made in the markets. Let me know what you guys think in the comments below. I look forward to reading your comments and what you guys think. And thanks for waking me up at like 6:30 in the morning when the Air Canada stock started taking off. I already had stock. I had stock a long time ago. I bought it at 14 something. I bought it and then I bought it back at 50. I bought it at 14, sold it at 17 or 18, then bought it back at like 14, 15, and then bought it again at 15 and bought it again at 16, and I've been buying up the ladder. So took a bit of profits today, so I'm happy from 3 airlines. Good job, guys. Keep consolidating. Keep restructuring your companies. Investors make, right? But you know what? Am I a criminal? No. Follow the trends. And he who knows shall be rewarded. Let me know what you guys think in the comments below. Lots of love. Thanks for watching. We'll talk soon. See you on Trends in the Housing Market.